What's up, my fellow traders? Hope you all having an awesome weekend and hope you all enjoying a nice sunny weather if you are living in the UK, especially in London. So as always in this weekend's video, I'm gonna give you something valuable to learn that will help you to take efficient trading decisions. I'm gonna talk about some trading psychology. I'm gonna talk about the trades I took. Also, one losing trade in silver and how it can mess up with your head and how I managed my losses and some winning trade. And I'll be also talking about the trades I have avoided because of some major news event, and a trade I took because of the major news event was happening, forecasted bullish, and we took a bullish trade in combination of technical signals. So lots of knowledge you're gonna gain in this video so that you can move forward in your trading with some good knowledge. And I always come on the weekend so that I share my experience with you every single week. Everything what I experience throughout the week, I share that with you, my losing trades, my winning trades, trading psychology, so that it will help you to understand the trading in more efficient manner. Also, two announcements to make. Like I promised a couple of months ago that I'll be starting live sessions for members only, and I'm just creating a new subscription right here for members only, and that's Priority Group Plus. Now, if you are an existing member, I'll be adding you for free in this subscription as long as you have an active subscription. If you still join the standard plan right here, until the new subscription is ready, you'll be still added in the Priority Group Plus plan for free. But once the plan is launched, hopefully by tomorrow or by Sunday, then you will see a new subscription where the live session option will be available for Priority Group Plus members only. Otherwise, this subscription will be still valid, but there will be no live session. So I'll be doing live session, and of course, if you are a premium member, you have a lifetime access for standard and plus plan as well. So I'll be doing live session once a week, and also it's going to be sometime twice a week. That's going to be surely once a week, and I'll send you a live session link day or 2 days before so that you are prepared for the live session. If you have any questions there, any confusions, if you are looking at certain market other than what I normally come and analyze on my YouTube channel, then we can discuss that as well. As you can see, I've recently done a live session, a public live session, and I've done some analysis there. If you have seen that, the market reacted nicely according to the prediction we predicted that day in a live session. So keep an eye on my website and also on my Buy Me a Coffee page as well. If not, that's totally cool. Make sure like and subscribe so that you can get a free content like this and educational videos like this every single day. And I'll be also start to make some educational videos here, starting with natural gas financial report. As I know, most of you get confused when there is a release of natural gas inventory report. That is what I'm going to explain you in a very simple way so that you have no confusions left when you see a financial report of natural gas. The third one, as most of you know, I've just launched a Money Markers Urdu channel. If you are someone who speaks Urdu, Hindi, then the link of that channel is in the description, where I also upload daily videos of market analysis and the educational stuff as well. So let's start with the first part of the video. And if you're someone who wants to skip this part of the video, that's totally up to you. You can skip it to the timestamp you have just seen a couple of seconds ago. So starting with this trade right here, as you can see on your screens. Now, this was a trade alert I've sent to my members. I'm going to show you the other ones, and I've avoided some other trades. I'm going to tell you the reason why is that. But all two trades were a winner. The one I've sent in the priority group. Now, let me show you. Right here, as you can see, a trade alert was sent to my members. Right here, we entered at this bullish engulfing pattern. If you are my student, the first thing I've looked at this market before I enter the trade and before I send to members. I've gone back up to a daily time frame right here, and when I saw the price is just making new highs every single time right here, and then we had another high with a pullback. So that was my analysis on a daily time frame before I entered. But if you are my student, do not worry about that. Is something you will get with experience, but follow all the rules which you learn in the pullback entry strategy. After looking at that, I've seen that a nice bullish engulfing candle right here, a swing low bullish engulfing pattern, an entry you learn with the full rules in my course. So we entered right here. Now I've also looked at the report at the financial news events, especially when I'm trading dollar. I always look at major news event. As you can see, the entry happened on 9th of April. And if you look here, we had a CPI report that was due. And if you look here, a major news event, CPI, right here, a forecast was bullish. Forecast was bullish than the previous one. We had 3.2 and forecast was 3.4. So if it was 3.4, then it would be more than the last one, and that would be positive for a dollar, right? And that was my extra confidence that I'm buying dollar. Forecast is bullish. And technically, we are above 50 EMA. Price is making new higher highs. Price formed a bullish signal, that is a bullish engulfing pattern. So I said, okay, I've set my stop loss and take profit. Now, very important to align with the ATR. As you can see, the price came very near to my stop loss and then it pushes up. Now, the mistake traders do, they keep stop loss so tight that it don't even give a room to price to move around before it pushes up. And in that process, is your stop loss is hit and then price pushes up and you start doing revenge trading. Always align your stop loss with the ATR. As you can see, the ATR is 25 and my stop loss is 31. So I've gone more than one ATR for my stop loss. And if you would have had your stop loss below this wick, that is also fine, so that you have the protection. All my analysis were in the favor of this trade. Now, creating a signal, that is not just a piece of cake. So that is why I want you guys to learn and look at the patterns, look at the confidences before you enter your trades. Trading blindly will give you nothing but just stress. So we entered here, and that time when the price was here, I was waiting for the news to release, and I was positive because it was forecasted. Now that could have gone against me as well. In that case, we have a protection of my stop loss, but the odds were in my favor, and we had a news released right here on this candle, and how nicely it hit my take profit. Initially I've gone 1-to-1, and that was my 1.4-to-1 take profit has been hit. So that is how you analyze your market, and that is how you take your trades. A pullback entry, a successful trade that made some good amount of WIP. You don't need to be trading every single day. Look for the opportunities. Wait for the opportunity to come to you rather than just trying to jump in the trade without any signals. Looking at that, I want to show you one more example of silver, a losing trade I had right here. So for silver, I've entered this trade at my major area of value, a zone we were looking at for my counter trend trade. Even though it pushed down from my zone, if you look at daily time frame, we are still not broken above this zone. So I look back and see a nice zone from where the price pushed lower dramatically, and it is still pushing lower. But for me, I enter on smaller time frame, on 4-hour time frame. We had a nice swing high bearish engulfing candle that happened at my area of value. Everything was going in my favor. I entered right here. Everything was in my favor, even though we had a nice divergence in the RSI as well. So you see how nicely the price is giving you a signal to enter your sell trade. I still enter this trade, but let me tell you, I entered this trade, silver trade, with a very low risk. It is not one of my favorite commodity, but looking at this major area, that was a very nice opportunity according to my analysis, and I've entered my trade. But I have my stop loss right here, and I entered with a very low risk. And what do you see here? Price still hit my stop loss, right? And then quickly pushed back down. Now this is an area where your mind gets messed up. When you say my stop loss is hit, that was a stop loss hunting or something, all the theories that comes in your mind. What if there is no stop loss there? Why? I placed my stop loss and when the market just pushed lower. Now, let me ask you a question. Or do you had any sort of idea that price is going to push down from here? What if the price just pushed up dramatically? And that pushed up, trust me, that was a massive push up already till this week. In this type of situation, what you do? When your stop loss is hit, you just start to do revenge trading. You see this big candle, right? Now you say the price just pushed lower, we had this big fall. What do? You start buying here, and in that process market pushes lower again. You start buying at the lowest point in a hope the price is going to push up from here again. Or you start selling here at the lowest point, even though there is a sell candle right here, but you still start selling here with a fear of missing out when this candle closed. Then you start selling at the lowest point of this candle in the hope that price is now going to reverse from here. That is how the market messes up with your head. when your stop loss is hit, you start to do revenge trading. You start to see a big moves. You want to enter, you want to capture these big moves, and in that process you blow up your account without realizing what if there is next good opportunity. Right here, New Zealand Japanese yen. Let me ask you a question. If you have no money left in your account, would you be able to take this trade? No, you wouldn't even able to take that trade. My stop loss was hit. I was okay to enter another trade. I was looking for next opportunity. By the way, the USD CAD was the next trade for me. This was the first one I sent in the priority group. A nice pullback entry. As you can see, the price is pushing up. Recently broke above 50 EMA. I have gone back to daily time frame. So when I've entered here, I've seen that price just broke above nicely, and we are above 50 EMA as well on daily time frame. So market is trending up, so there is no harm for me to enter this trade. Even though we entered late right here, but we had a bullish signal right here on Friday, but I want to wait till the price come back to my entry point, and right here it did come to my entry point, and right here initially it was 1-to-1, but I've managed my trade till this recent highs, and even though the price pushed up from here as well, but I've exited my trade because I don't want to be greedy. Pull the money out of the market. If you wanted to manage it, you could have managed it and move your stop loss to break even, secure your profit, and in that process you can able to grab some money till here before the price cuts you out in break even. So that is how you manage your trades, and that is how you pull money out of the market. Now everything was done according to the rules. Nothing was done with a guess. Then the report was sent to the members. We are looking at copper right here, and price was somewhere here, and I was looking for a nice push down out of this zone, and we were prepared to take an entry. I've sent the other zones report, but we didn't get any opportunity in the other commodity market, but here we had conditions. Price hit my area of value. For the counter trend trades, right, forms what? Forms a nice swing high bearish engulfing pattern. What is the ATR? ATR is 36, and right here the 36 ATR would have been hit right here, but I have kept my stop loss above this wick, this little box, and get a better risk to reward ratio. And as you can see, the target of 57 points has been hit with exact rules, and the price pushed back up again. That is why ATR is very important. It keeps you with the volatility of the market, and it tells you how much price is going to push up and down by counting the previous 14 candles. That is why on the ATR, as you can see, if you look at the settings, ATR is 14, length is 14, means you look back 14 candles and calculate and give you the number. That is the ATR, keeps you with the number. That is why very important to align your stop loss and take profit according to the ATR. Add some numbers with that, but always align yourself with that. So hit my take profit and then pushed back up, still in the zone. I'm still expecting a good push down out of this commodity. So that is how we took the trade out of copper, a nice one, a nice winning trade. One forex zone reacted nicely. A zone report was sent to the members, and the only report that gave me an opportunity to enter a trade, which is NZDUSD. That was not sent as a trade alert because that was just sent as a report, and I've mentioned that I'll be looking for my entries on smaller time frame if we get conditions. You know the condition because if you are in my group from long time, you know what conditions I look to enter my trades from the group. Now the condition I want to show you, which is a big bearish engulfing pattern. Now the reason I've not entered at the close because we already had some big volume. That is why I wanted to enter if we get a pullback using my Fibonacci tool. And with the Fibonacci tool right here, I grab my Fibonacci tool from high to low, which is right here. I wanted to enter at the 50% retracement. If we would have got, I would have entered right here and with a limit order, and so that I can get a better ROI with this pullback instead of entering right at the close. So I missed an opportunity to enter an aggressive entry, but what do we have after that? We had a pullback entry, right? The price reacted nicely, but if you have entered at the close, that is also a valid aggressive entry, and if you have taken this as an entry, then that is also cool. But for me, I waited the price for the pullback, which we did not get. For me, I chose to enter in a less aggressive way with a pullback, but I missed this trade. But after that, price broke below 50 EMA. We had a pullback followed by a nice swing high bearish engulfing pattern, and I have entered my trade right at the close right here, and price pushed up, and then eventually it hit my take profit. I have not managed this trade, just took my fixed target of 31 pips. That is how I do my trading without any guesses. I'm going to give you some little suggestion. If you want to trade, don't just invest your money in some app and feels like you are playing a game. If you want to start your trading business, take it seriously. Get your laptop, do your analysis, the one I've just shown you, look at the confluences, because when you start your business, you just don't sit at a desk and start selling your products. You do a research, right? You look at the market, and see which product is performing well, and then you buy that product and look at the areas where you have more demand of that product and start selling that. Imagine you want to start a business and buy some random product and start selling there without knowing the interest of the people living there. Same goes with trading. In trading, you do your analysis, right? Now remember, backtesting is very important. Don't just jump into trading and start investing your hard-earned money. You have to go through a long process. You have to learn trading first. You have to do backtesting first, gain your confidence first, do a risk management first, and then you have to have a strong trading psychology. Only then jump into trading business. So we have done our analysis, and that is how we made this money right here. So before I wrap the first part, I want to show you the trade I have avoided right here. Now, I've already shown you that we were expecting a dollar to get stronger, right? We had a price just made a new high right here. We are above 50 EMA. We are above 50 EMA on daily time frame as well. After a pullback, we have a bullish engulfing pattern, a nice bullish swing low engulfing pattern. I have not entered this trade. I avoided because I was already in USD Canada trade, which I've just shown you, and the dollar news was expected to get stronger. That is why I don't want to bet against dollar. I want to stay in the favor of dollar. Like I say that, I always look at the major news event. You can still enter this trade. I'm not saying that when you see a condition, you shouldn't enter the trade. When you see a condition, there is no harm in entering the trade, but reduce your risk. News doesn't mean that it's always gonna go in your favor. What if the news was negative? Because we didn't know until the news was released. It's just a forecast that was bullish, but there is lots of time when the forecast was bullish, but when they release the report, it turns out to be bearish. So that is why I don't say that if the forecast is bullish, you shouldn't enter the trade. You can still enter your trade if it follows all your rules, but reduce your risk. If you are risking 2%, go 0.50%. If you're risking 5%, go 2%. It's totally up to you. I'm not advising anything, but this is just a generalization. That is how I personally take my decisions. So I hope you got a value, and I hope you have learned how we can manage our trading business. Treat it as a business. If you treat it as a business, only then you can able to take it seriously. Trading just on a mobile phone, following a signal provider doesn't make you rich. Hard work, consistency, gain a knowledge, get yourself pro, then start this business. And trust me, you can make money in this business, as you have seen the last year's results, and this year's results so far has been amazing if you are in my priority group from day one. So let's wrap this part of the video, and I hope you got a value. And if you made it to the first part of the video, you are a legend. Pause the video, hit a like button for me. I'm still waiting. Yes, I can see you guys pressing a like button. Okay, let's move on to the analysis part, which is natural gas, gold, silver, and crude oil. And I'm also going to go through dollar index today as well, looking at a nice trending market. So, starting with natural gas. Now, I know most of you get frustrated when you see a moves of natural gas up and down, not pushing up. Now, I always say it is just a process when the price is about to bounce up and about to reverse from the major areas. It doesn't have to just push up straight away. It always gives a breather, especially for the commodity. It just don't straight away push up unless there's a big news event. And not to forget about the war situation. And if you have heard about the Iran tensions, that is why it will affect commodities heavily, and it can also push the price of commodities dramatically, just talking about fundamentals. Because of inflation, due to this war and all the pandemic, that is why the commodity price is getting higher, and that doesn't mean you just start buying. We still look for the condition. If there's inflation, if there is war, price is pushing up, we're gonna buy, right? We're going to go at the winning side, but for that we have these conditions that signals that price is likely pushing up. Now, talking about technicals here. So as you can see, price is still pushing up, and we have this little trend line. Now it's still pushing up gradually, right? I want to see 3 touches to call it a nice, a strong trend line. But at this point, if you see from this trend line, it did not break and close below, formed a bullish engulfer, and we are pushing up from here. Now at this point, that is not my buy signal, just let me tell you, but that is a strategy some of the traders also trade with the trend line. If they see a bullish engulfer, they start buying. That is one strategy as well. If you are trading on that, that's totally up to you. Make sure you test that. But for me, I use these major area of value, but we can look at the trend line as well just for analysis. First, the zone below, which is right here 1.476, that goes to 1.645, a major zone from where price is bouncing up, looking at a nice double bottom pattern. The price is pushing up after creating a good double bottom, rejected 50 EMA, and now pushing back up. It might push up again as well. But what are the conditions for that? For now, if we see a price to break below this trend line, now very important, close is very important. Close of the candle with the body is very important. If we have that, we have a likely chance the price will retest and then fall back down to this little anchor level 1.583, that goes to 1.598, from where we can get a possible push up. So this is something you need to look at for your long-term analysis. Still bullish long-term, but what if we see a bearish candle? Now, if the price pushes up from here, below 50 EMA, must be below 50 EMA, and one candle can still go above 50 EMA. If we have that, and then if we have a bearish engulfing candle, in that case, we have a sell signal for short term. Price can push down 1 or 2 ATR easily and still push down as well, just for short term. That is a very simple and easy condition for my pullback entry bearish, looking at the fact we are below 50 EMA, and you know the pullback entry bearish, we only look below 50 EMA. So that is a short-term sell condition. For buy, I want to see, let's say if the market opens above in gap, above 50 EMA, in that case, we start to look for the pullback entry bullish only. Very simple, above 50 EMA, pullback entry bullish, below 50 EMA, pullback entry bearish. So if we have that, we're going to enter our long trade with a pullback followed by bullish engulfing candle. So these are the conditions for my pullback trades. But if we have a dramatic push down without any conditions, remember, if there is no condition, there is no need to enter the market. If dramatic push down, I'll be looking at this little level I've just mentioned. If we have broken below, in that case, we have a signal that price will now push down, likely towards this level again. Now, one candle close below, let's say we have that can be a fake out as well. Remember that one candle can close below and then a very next candle can push back up again. That is why I always say with one candle and then we have two candles, in that case, I will start to look for my pullback entry bearish, possible retest, and then push lower. These are the conditions now I'll be closely looking at for natural gas. Keep an eye, look for these conditions I've just mentioned. Once we have a condition, we are good to go for our trades. Exactly the same. Now, here on this platform, if the price starts to push up, as you can see, we are above 50 EMA. If it starts to push up, remember I've said that we can expect a major double top in my last previous videos, and we are still in a range of double top pattern. This candle did not close above, but came back down and closed back down. So that is why that's a minor double top pattern, not a major one. Major would be something like this. Let's say the candle closed somewhere here. I will keep my stop loss bit above the wick and take profit 1-to-1 initially, something like this. So if you have this condition, I will go short, but short term only. I'm expecting some nice push down from here and then a possible push up back to my rejection zone. If the price starts to push up from here, looking at this nice 382 candle at this trend line, in that case, we will have a good double top pattern. And the condition is, we're not going to start selling here when the price hit my rejection box right here. Condition is to see a bearish signal, which is, this is nice 382 candle. If we have a push up and price forms a nice 382 candle, in that case, we will have a valid double top pattern. So let's adjust this box something like this. So price must form a bearish condition within this box, either a bearish engulfing pattern like this or a 382 candle like this little wick. If you see here, something like this, either the single candle like this or a combination of two candles like this. If we have the signal, we have a valid double top and price will then again pull back before it pushes up. So this is the condition I'll be looking at. Body is not allowed to close above this rejection box. If the body closed above, the double top pattern will become invalid and we'll start to look for the pullback entry bullish only until we see some sort of signal, bearish signal within this zone. Now the zone above, which is 2.002, that goes to 2.153, a zone from where we are now looking for a possible double top within this rejection box. Otherwise, we are still above this trend line. If broken below this trend line, only then I start to look for my pullback entry bearish and keep on taking shots till when? Till we are here at this little anchor level in blue, or for the major entries, this is a zone below right here. If we have a dramatic push down, from where we're going to look for next counter trade if we have this much dramatic push down. Otherwise, look for the conditions I have just mentioned. Very simple and very easy. No need to get confused. Rewatch it. I'm sure you're going to get a concept of it. Here on Nemix, exactly the same. For your double tops, something like this. Your rejection box is something like this. Exactly the same condition I've just mentioned. If we have a push up with rejection, bearish engulfers, or 382 candle, in that case we will have a sell signal and price will likely push down. Close above this high, this box will signal the price will gonna push up. Now if the price push up below 50 EMA with bearish engulfer, we have a sell signal and price will likely push down 1 ATR. If broken below this trend line, in that case I'll start to look for pullback entry bearish till we are right here in the zone for our next possible push up, or we can still get a nice push up from the upper level, which is 1.597, from where we're going to look for our next buy trade if we have this much dramatic push down. So we'll see how the market opens above or below. According to that, we're going to look for the conditions I've just mentioned. Keep an eye, these are conditions now I'll be looking at closely for natural gas. And remember, we've been taking some nice badass trade of natural gas. All of them were with conditions, and every time we get a condition, I've mentioned that before and send trade alerts to members as well. Right here, what do we have on silver? So if you have entered this trade at this double top, your stop loss has hit. Now at this point, we are still not broken above this zone on daily time frame. Looking at that, if you see, we have a bearish engulfer, swing high bearish engulfing candle at this area of value. So long term, we have a very possible chance can get a possible push down to 20 EMA before the price will push up again. So that is what I'm looking at long term. So on short term, if we have a good push down to 50 EMA, above 50 EMA, one candle goes down below 50 EMA, that is fine. If we have a next candle above 50 EMA, that turns to be a bullish engulfing pattern. In that case, we will have a buy signal, and price will likely push up at least 1 ATR, and it can go up till these recent highs as well, from where we can get another push down. So next buy trade from here, if we have a bullish engulfer, or if we are broken dramatically above this high, we start to look for a pullback entry bullish. But we can still look for the pullback entry bullish if we have a condition above this 50 EMA, bullish engulfer, keep on taking longs. I'm not looking for sell trades at this point as long as we are above 50 EMA. Once we are broken below 50 EMA, only then I'll start to look for my pullback entry bearish till we are in the zone below, which I'm going to mention in my next video. So keep an eye, these are condition. Look for the pullback entry bullish if we have a condition above 50 EMA. Next we have gold. Gold is now back to the anchor level. I'm still expecting some more push down out of gold. It can still push down to the lower anchor level, which is right here, 2302. That goes to 2310.34, from where we can get a possible bounce again. Now, if the price forms a bullish engulfer above 50 EMA, in that case, we'll still have a buy signal and price will likely push up. That can be another breather before the price will push up from here again. So keep an eye, pullback entry. If we have above 50 EMA, we're going to go long. If the price falls to this anchor level, we can get a possible bounce from here. Sell trades will be only if we are completely broken below this anchor level and only going to take short. Now we're going to look at the ratio of gold and silver as well. As you can see, the ratio is about to reach a level of trend continuation zone bearish. Now we have a likely chance the price will push up and forms a bearish engulfing pattern at this area of value at the ratio, which is right here, the number in blue. If we have a condition, the price will start to fall from the ratio to the next level of support, and a fall here is a rise of gold and silver. So if the price forms a bearish condition, it will likely form a bullish condition here, and it will start to push up from here for gold and silver as well. That is why I'm keeping an eye on gold to silver ratio as well. And you guys also plot these zones on your chart and look for the condition. If you have a bearish confirmation here, we have a likely chance that gold will now start to push up from here and ratio will start to push down from here. Next we have crude oil. As mentioned, we had a bearish engulfing candle right here, and we had a nice spike up after that. As you can see, that time the price was here, price pushed up nicely $2 from here, and we made a new high. So at this point, for my next buy trade, very important, I want to see a complete break above this high. Only then I'll start to look for my next pullback entry bullish and keep on taking longs till we are in the zone above, which is right here, 90.71. That goes to 93.26, from where we will look for a counter trend trade with bearish engulfers double top entry pattern. We are still in a nice uptrend on daily and 4-hour time frame. We can get a possible deep pullback to 20 EMA, and then price will likely push up on daily time frame. But for conditions on 4-hour time frame, I want to see a break above this high and then I start to look for my pullback entry bullish. If we are broken below 50 EMA with good momentum, at least 2 red candles, only then I start to look for my bearish trade. Otherwise, I'll wait and see how it goes. If it open above this high, it goes above this high, I'm still bullish for crude oil. And once we have a condition for pullback entry, we're going to go long till we are in the zone above, which I've just mentioned. So only buy trade as long as we are above 50 EMA. Lastly, dollar index. Now, in my live session, I've mentioned the dollar index. We have this minor zone from where we can get some pullbacks, and as you can see, we had little pullback, price is broken above. Now at this point, I'm looking at a major zone above, which is right here, 106.88. that goes to 107.34. Now I'm not expecting a price to push up at this area, at least from where we can see a weakening in dollar. So at this point, I'm expecting some pullback and I'm expecting a dollar to push up till this level, from where we can get a possible push down again. So this is a zone again above I'll be looking at for the dollar to push down. Otherwise, now I'm bullish for dollar. We can get just a breather before the price will push up to the next level of major resistance out of dollar, from where we can see a nice push down. So have these zones ready on your charts, and if you are looking at dollar index in confluence with the other financial market, it's worth having the zone here so that you can look at the market dynamic and colorations in combination of dollar index. So that's it for today's analysis and today's video. Hope you got a value and hope you have learned something out of it. If yes, hit a like button for me. It really helps me in a YouTube algorithm. It helps my channel to reach to the other traders. Subscribe if you're new so that we can all trade together and trade efficiently. Hope you trade green rest of the week. See you guys in the next one. Have an awesome weekend. Till then, take care.